The doors closed soon, and the media was barred from this round table of top global banking executives on Monday. Inside, the opportunities and risks facing lenders in Belt and Road countries were discussed. Standard Chartered, one of the world's largest providers of trade finance, made about 2/3 of its revenue in Asia last year.
All the money that is needed to finance this huge infrastructure spending is there. So you need to bring together quite a lot of money, north of $1 trillion. And second, and even more importantly, the cooperation between public and private institutions, and particularly the role of international commercial banks, is critical to make sure that there is commercial and financial viability to the projects which are established.
By the end of last year, 9 Chinese-funded banks have set up 62 branches and representative offices in 26 countries along the Belt and Road, offering tailored services to local clients. At the same time, 54 commercial banks from 20 countries and regions along the Belt and Road had established branches, finance companies or representative offices in China. But geopolitical and financial risks are bubbling and need to be mitigated using credit insurance protection and overseas investment services platforms to help manage the projects.
So a good bank would know what type of project they are going into, what are the risks of that peculiar industry. Infrastructure has many facets, and while risk is there, they are actually very good loans at the end of the day. There's nothing which is not financeable within reason. The key is to have quality management in the operator of the infrastructure. The key is to have good machinery and equipment and suppliers who are supplying the machinery for the infrastructure, and then risk mitigation.
Meanwhile, banks are dismissing fears, saying that the level of non-performing loans will remain under control and not add to the local debt burden.
So the first thing that is needed is to identify which are the risks that matter to you in that particular project. And that is something that can be done much more easily if you have deep knowledge of the local markets. And that way you can assess what is the credit risk, what is the market risk, what is the foreign exchange risk, what is the political risk, what are all the operational risks having to do with legal system, legal uncertainties and so on.
China has encouraged commercial banks and private capital to provide funding and lending facilities. The Asian Infrastructure Investment Bank, New Development Bank and Silk Road Fund, together with China's policy banks, are some of the biggest lenders that have started to participate in cross-border investment projects. Martina Fuchs, CGTN, Beijing.
Let's get you more perspective on that story. And joining us live from Johannesburg is Dr. Bob Wekesa. He is a postdoctoral fellow at the WITS Journalism and China-Africa Reporting Project from WITS University. Also with me here in studio is Dr. Robert Kagiri. He is the Director for Strategy and Policy Management at the African Policy Institute. Dr. Kagiri, thank you. And let me begin with you. A pledge of billions more dollars for the Belt and Road initiative from Chinese President Xi Jinping. What's your reaction to that pledge?
I think this was expected because, you know, over the last, from between 2014 and 2016, there's been an investment, a big investment by China of over 50 billion on OBOR projects. And these have generated close to 3 trillion in trade. And this is a natural progression, and for us here in Africa, we are trying to see how we can gain a big chunk of that investment to help us develop along the maritime Silk Road. Yes.
Dr. Wekesa, the same question. How encouraged should we be at China's pledge of additional funding?
No, I think it is significant that Africa has fully been co-opted into the Belt and Road Initiative. In fact, as it is, it's not anything absolutely new, because lots of parts of Africa, particularly on the eastern seaboard, have been part of the ancient Silk Road. But in the recent past, we've seen lots of railways, roads, and you know, other forms of infrastructure developed on the African continent. And the current Belt and Road Initiative trajectory will only go towards building on that. And it is important that Africa is fully represented, as we've seen in terms of the number of leaders and African countries on the table as this very major global initiative takes off.
Dr. Kagiri, one of the challenges will be getting those funds to Belt and Road projects here in Africa. Can you talk us through some of the challenges?
I think there are more opportunities than challenges. It is up to Africans, the African nations, to be able to argue their case, which is what has been happening with the presence of Uhuru Kenyatta, President of Kenya in Beijing, the President of Ethiopia, and also Egypt has had some representation from their Trade and Industry Minister. These are the three key focal points for OBOR in Africa, the Eastern Seaboard. So if they are able to show how this investment can help to roll out the One Belt, One Road initiative to Europe and to the rest of Africa, it depends on how convincing they are, and I believe they are, because already we have begun to see benefits from the Ethiopia-Djibouti Railway, the SGR, which is opening next month from Mombasa to Nairobi, will be the first stage in opening up the Northern Corridor towards Kigali and Kampala onwards to South Sudan. So if we're able to show how aligned the African agenda is to OBOR, then we shall be able to see more of that chunk coming to Africa. And I expect our delegations that have gone there have been convincing enough. Yes.
Dr. Wekesa, Belt and Road projects in Africa are already massive, but their potential to link up regions is even more impressive. What more can you tell us about that?
No, I think first of all, to just comment on the earlier point, the challenges that emanate from the African continent actually should be seen as an opportunity in the first place. The fact that the African continent is ill prepared in terms of road, railway, seaport, and other forms of transport infrastructure means that African countries actually should be on the forefront in terms of co-opting ideas from the Belt and Road initiative, so that perhaps they can benefit. If you look, for example, at a vast country such as DRC, Democratic Republic of Congo, I mean, once you are in some parts of the country, particularly the eastern parts, you can't simply travel, and yet it is one of the richest areas in the world in terms of mineral resources and so forth. So I see these as challenges that can be tackled at three major levels. At the Africa Union level, we need to build on the African integration initiatives under the AU that are actually down on paper as part of the Agenda 2063. At the regional level, we have a regional economic community such as SADC, East African Community, Economic Community of Central Africa States, and ECOWAS, representing the Western Africa region, and the Arab Maghreb region. These also have put together plans for many years, which now need to be implemented, and the Belt and Road Initiative provides an opportune moment to actually leapfrog on those. And of course, finally, at the national level, we need to see the plans, the visions that many African countries have put in place, tap into the funding and connectivity that's going to come from the Belt and Road Initiative to then ensure that the challenges actually become opportunities, and we plug our infrastructure challenges, so that then we can be able to do lots of trade intra-Africa and therefore achieve economic development.
All right, so let's leave it there for now. Gentlemen, thank you very much for joining us from Johannesburg, Dr. Bob Wekesa, and here in studio, Dr. Robert Kagiri.